The rapid rise that we've been seeing recently in the prices of major agricultural commodities finally came to a grinding halt towards the end of last week, and especially on Friday when we saw grains such as corn almost hitting their limit down on the futures market. And it wasn't only corn either, we saw major declines with wheat and soybean, which saw its biggest weekly drop since mid-2019. Now, you may remember a few weeks back on this channel, we had a video where we were discussing the report from the UN Food and Agricultural Organization, where they were seeing that food prices were rapidly increasing around the world. So that trio of grain prices we just saw, well, we can see that that trend was continuing in January up until last week. Now, there were various reasons for the agricultural prices rising. There was increased demand from China, harsh weather conditions in Argentina and Brazil, and tariffs and export restrictions from Russia and Argentina. So basically, there were supply concerns in South America and heavy demand coming from China. So why the sudden decline in prices? US government data shows hedge funds cut their net long positions in corn and soybean, with March corn futures declining by 4.5% throughout the day, March soybean futures falling 4.3%, and wheat falling 4%. Now, this decline coincided with the start of the Brazilian soybean harvest, the biggest producer in the world, and it's anticipated that this year will be Brazil's record harvest due to good weather conditions. And speaking of weather conditions, the forecast in Argentina next week shows an increase in rain in the north of the country, which is improving the outlook for grain yields and leading some analysts to calling it a weather market. So better weather conditions may continue to have a negative impact on the price of some grains. However, as we all know, especially those of us who are living in sunny England, weather forecasts are not always accurate, so harsh weather conditions could make the downturn in price more of a short-term fluctuation. We'll have to see about that. And as mentioned just a moment ago, another reason for the high prices was the demand coming from China. Corn and wheat imports doubled compared to the previous year, but then the virus started spreading again in China, which has triggered another lockdown and therefore weakened the outlook for Chinese demand. However, despite these negative price factors, there are still reasons that this downward price spiral might just be limited. For a start, Chinese demand for soybeans and corn is likely to increase as the prices decline, partly due to the country rebuilding its domestic hog market, which was almost decimated by African swine fever in recent years. There are also export restrictions on some products such as wheat and corn from Russia and corn from Argentina, and although some South American countries are expected to get rain, they still haven't completely recovered from the unfavourable weather conditions. The USDA report late on Friday showed that there's still strong demand, particularly for corn and soybean, so perhaps the sell-off was a bit of a knee-jerk reaction with some profit taking, but with the Brazilian harvest underway and better forecasted weather conditions in South America, reaching higher prices may just get a bit tougher. So just a reminder guys, we have our new social media accounts set up for market movers, so check those out in the description, and please do like and share our videos if you find them useful. We appreciate all your support as we grow this brand new channel. We're really enjoying it so far. We hope you're finding it useful and informative as well. We'll see you in the next one. Thanks for watching.